I want to say welcome to everybody who is watching from the Black Financial Channel. If you haven't subscribed to the Black Financial Channel, go to theblackfinancialchannel.com. This is where I'll do some daily briefings on what's going on in financial markets, what's going on in the news. Anyway, a lot of you may have or may not have participated in watching the Super Bowl last night. The Super Bowl, it was a pretty dry game. I'm not gonna lie and say I didn't watch it. I did watch it, but I didn't enjoy it. It wasn't a great game. But one of the things that did happen, which you may know from watching the news, is that the New England Patriots won their 6th Super Bowl in the last 18 years. 6 out of 9 tries. They were able to pull it off again. Tom Brady's pretty old, which is pretty impressive if you ask me. But here's the deal. Here's the thing. A lot of people have this idea that the Super Bowl winner is correlated and connected with the performance of the stock market. Now, some of you may be invested in the stock market. If you're not invested in the stock market, I hope that you'll consider starting, because I can tell you right now, as a finance PhD, you guys know I've taught college students for 25 years at major universities. I can tell you that if you don't invest in the stock market, you don't own a home, and you don't own a business, or at least one of those 3 things, then your chances of becoming wealthy are going to be extremely difficult. So just know, in fact, not just difficult, but really impossible, because just the mechanism of wealth is one where there are channels through which wealth flows. Wealth flows through the channels of real estate. It flows through the channels of entrepreneurship, flows through the channels of stock market investing. So trying to get wealthy without investing, without owning a home, is a lot like trying to drive down the road in a car that has no wheels. You can try it. Maybe you can walk faster than a car, but it's going to be really hard to do. So anyway, those of you who are invested in the stock market might have noticed that the Dow Jones Industrial Average shot up today. It went up, I think, by about 100 and something points or so, give or take a couple points. And a lot of people were claiming and connecting this to who the winner of the Super Bowl was. A lot of people were saying that there's an article that I found where they looked at the past Super Bowl winners, and they basically found that when the Patriots win the Super Bowl, the market has gone up almost every single time, and when they lose, the market has gone down pretty much every single time. So today is February 4th. The Patriots won the Super Bowl yesterday. The market shot up. The last time they won in 2017 and 2015, the market shot up both times. When they won in 05, 04, and 02, the market shot up. It shot up once. It stayed even once, and it went down one time. The one time it went down was the first time they won the first win that they had. Now, with losses, they have 3 losses in the Super Bowl out of the 9 tries in the last 18 years. The market went down all 3 times. So 100% of the time when the Patriots lost the Super Bowl, the market dropped. Now, is this connected, or is this a coincidence? Well, it's kind of a funny thing. When I used to be in my graduate school programs, I remember when we used to do research, and one of the things that they really believed is that anything that you used in your research to predict the stock market, any statistical analysis, data analysis that you did, any research papers you wrote in which you were trying to predict future performance of the stock market, it had to be linked to a theory that made sense. It had to be linked to something that related to investment strategies or risk factors, or something that financial scientists understand, because we prided ourselves in being scientists, right? We use scientific methods and statistical methodologies and advanced mathematics and computer programs and all this other stuff. So, you couldn't just come in and say, well, I think that if the Patriots win the Super Bowl, the stock market usually goes up. And they would probably look at you like you're crazy. I could not have written my dissertation and said, I want to do my dissertation on whether or not the Super Bowl winner determines who is going to, or whether we're going to make money in the stock market the next day. That would not have flown. My chairman would have laughed me out of the office. But here's an interesting thing. Over time, there's kind of a school of thought that links to my area of specialty, which is actually financial psychology. And I've always been fascinated with how the mind works, because I believe the mind is the key to everything. I believe that if you, for example, like they say, if you believe you can do it, or if you believe you can't do it, you're always right. You're 100% correct. And I really believe that. I believe that what you believe can happen, well, it can happen, and what you believe can't happen, can happen. That's why I'm so big on encouraging Black people to think better about yourself. Think better about your possibilities. Think better about your strengths. Think better about Black power. Think better about Black building. I've always said that because I know that how you think about yourself is going to determine what the world feeds you, right? The world will serve you with whatever food you're looking for, right? So anyway, one of the windows of possibility that could actually link the Super Bowl winner to the stock market performance the following day is this. There's something related to what they would call investor sentiment, which basically comes back to how investors feel. Do they feel optimistic? Do they feel pessimistic? Do they feel good about the future? Do they feel bad about the future? Are they excited or are they scared? You think about your own life, right? When you're excited and optimistic and unafraid, what do? You take more risk. You're willing to go out in the world and try new things because you're not scared of anything, right? But if you're pessimistic and you're afraid and you feel like there's disappointment that's waiting around every corner, then what's going to happen is you're going to see your life kind of take a downward trajectory, and you'll also see your actions kind of centered around fear. Your actions will be driven by fear, right? So you're not going to go out and buy a new refrigerator if you think that you're going to lose your job in a month, right? You're not going to go buy that new car if you think that that something's going to happen, and the economy is going to crash, right? Because you're afraid of not having enough money when times get tough. So basically, some might say that perhaps for some reason a win by the Patriots, because people have found this connection in the past, because there's this correlation in the past between Patriot wins and stock market performance, there are people who say, oh, the Patriots won, the market's going to go up. So when I think the market's going to go up, do I buy or do I sell? I buy, right? I buy, right? I go out and I buy. I say, oh, yeah, I'm going to make money tomorrow. Let's go buy. So what happens is in the stock market, when everybody's buying, what do prices do? The prices go down or prices go up? Well, prices go up because demand has increased, right? So that's one argument that could be made as to why it may have become what they would call a self-fulfilling prophecy, that it works because people think that it's going to work, which is kind of a crazy thing, but there is some truth to that. There is finally some research there that kind of supports the idea that investors are human beings that have emotions, and sometimes their emotions drive their investment decisions, which therefore affects the prices, right? So anyway, all right, so that's the key point I wanted to kind of bring up. If you were watching the stock market today, you'll notice that the market did go up. If you have a diversified portfolio, chances are you did make money today. If you want to know more about how to invest, I have a great stock market class. You can go check it out. It's theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. Also, don't forget to subscribe at theblackfinancialchannel.com if you want to get sort of daily financial updates and all that good stuff. And one more thing I'll let you guys know is that sometime this week, the rapper Killer Mike, who's doing this documentary on Netflix called Trigger Warning, which is very, very good, he's actually going to come on Dr. Boyce TV this week. So I hit him up and sent him a text, and he agreed to come on. So we're going to come on and talk about his documentary, kind of dissect some of the issues that he's bringing up in this really, really extraordinary documentary. I highly recommend that everybody watch it. So don't forget, go to theblackstockmarketprogram.com. Also, if you want your kids to learn what you're learning, you want your kids to get ahead of the curve, you want your kids to be prepared for the future, we have a great Black business school for children. We have a Black law school for children. It's all in the Black business school. So if you want to check out the Black business school for children, you can go to blackmillionairesoftomorrow.com. That's blackmillionairesoftomorrow.com. We're not about what's going on right now. We're all about preparing for the future. That's what we believe in, and that's why we have these things in place to help you to make decisions that are going to position your children to be strong. So take care, everybody. I'm out of here, and I hope you guys have a great day. I'll see you soon. Bye-bye.